Hi traders, good morning, good afternoon, good evening. I hope all of you are doing good. Today I'm going to touch upon a very important topic which is actually keeping you away from being successful trader. The most biggest problem today what I see is that people always get confused where to keep their stop loss, and even if the calculation is right and they keep the stop loss at the best possible position, even there is a chance that it might get hit, and then the stock or an index starts moving in the direction which you are actually planning to. So how to avoid this? The best way to trade is using options. You need to understand the options, how it is built, and what are the Greeks involved. And you need to follow simple strategies which I teach on my channel, and you can refer to the videos which are there. There are about 100 videos which I have done so far, and you will be able to understand like how, when in a bullish scenario, what is the kind of position you can make using option, and if it is a bearish scenario, what is the position you can make using an option. The advantage of using an option is, please pay attention to this. What I'm saying right now is that when you are bullish and you want to make a position in the same direction of the market, then usually you buy the index or a stock at that particular position at price, and then try to put a stop loss which is about the calculations what you use. A lot of people use various techniques to put a stop loss, but there you are looking at the risk. Like, say example, you have put a stop loss of about 20 points, 30 points, which you are taking a risk of about 3 to 4,000 and suddenly the market snaps and it touches your stop loss and starts going up. In this scenario you are going to have a sure shot loss. But if you are using options, you can always make a position where there is no need for you to put a stop loss. That means if you are buying a call option and looking at your risk appetite, you buy a strike about like 300 points away from the call option and sell that call option. So your risk is already defined and your reward is also defined. So most of the people might say that if I don't put a stop loss, my reward will decrease, but the chances of hitting the stop loss is very big. So in this scenario, even if the market drops into your stop loss position and goes up, still you'll be profitable by the end of the day. So it's always better to use hedging strategies to make your positions, whether it is bullish, bearish, which I teach in my channel. And today also I'm going to touch upon this and show you on charts and also on option simulator how to do this. So let's get started.
Yes, traders. So here we are on a Bank Nifty chart, and this is a monthly time frame what I am looking at right now. So as you can see, market has dipped into this zone, and from there we have seen a big rally which has taken out this previous high. So let's mark the previous high here. First we'll do an analysis on Bank Nifty, then I will show you how to do the hedging strategies on options, and what is the right way to trade for you without getting your stop losses being hit. So let's get started. So here we have marked our previous zone, and this has taken out this high. So now one thing you need to understand about price action is that whenever a previous resistance is broken, price will always try to come back and take support here and then move up. So if you want to invest, then you should invest like 10% here, and on the way down you should invest balance amount, and here whenever you see a complete reversal of a green candle, then you should invest the balance 50%. So like this you should plan your investment so that your average price will be somewhere here in between, and then when the market takes out the previous high, you're already in profit. So let's analyze Bank Nifty quickly. So on a monthly time frame it is bullish. After this consolidation it has moved up really nice in this month, and when we look at the weekly chart, the weekly chart we are seeing that this week has been a little on the bears side. Here we can see the volume is also at par with the previous week, but not that great, but we can expect some kind of reversal from here. and if the market has to take a support, it has to come to this level and then move up. So I don't see any other level of support here. You can see even if we can look at the left, this was the previous peak, and definitely after forming a new peak, market always takes a support and moves forward. So here we can expect that it can drop, because these two candles, this is a topping tail bar which is our setup, this is definitely giving an indication that next week can be a downtrending market. When I say market, I'm talking about Bank Nifty index. So let's look at the daily chart. Daily chart, the market is, Bank Nifty is right taking support on the super trend. Okay, if on Monday if we see super trend break, then we can expect that the trend has changed and it can stop at multiple levels. This is one level, this is one level, and this is the last level which it can stop. So we have to see which level it will take a hold and start going up. So all this is all price action which I am teaching you. This is all price action techniques. If you are able to identify zones, then it becomes easy for you. Market always respects the support and resistance, so always try to make trades basis that with a confirmation candle. And in my videos you will find that most of the time our confirmation candles are bottoming tail bars and topping tail bars, which you can refer. So let's see this on a 3-minute time frame. On a 3-minute time frame, see it has opened, gap down, and then it touched the CPR. And if you are a CPR trader, you should always wait for this CPR rejection to happen. Once the CPR rejection is happened, you can go heavily short on this, because this gives you 100% confirmation that it is going to drop. And after that, there was a support at VWAP. Most of the people know it's not easy for price to actually break the VWAP and go down consistently. So it will not come like this and immediately starts falling. So then there is a huge pressure. So you need to always watch the VWAP levels. And if the market, see, first instance it has bounced and got rejected at super trend. So when a price rejects at super trend, that is also another indication. This is your first indication, this is your second indication, then it started going on, and this is your third indication. So 3 spots, you can add 3 lots and then go down and exit here at this place. Okay, so now how you could have traded this? You could have actually traded, it is very easy to tell that you can buy 36 or 36,500 put, 36,500 put, and be there with the stop loss. But that is not going to happen, because the kind of 20-30 point stop loss you keep, these fluctuations will take away that stop loss. So it's always better that how do we trade this kind of a market? We usually see, for example, here this was your in the money, right? 36,600 call you can buy, and just 300 points away, 36,300 call you can 36,300 put and 36,300 put, both, because we are trading with the direction of the market. This you can buy and this you can sell. Here your risk is defined. I will show you on Opstra how does this look. Let's go to Opstra and see. So here we are on Opstra, define it. So we get started here. So what do we do now is that we go to Bank Nifty option strike, select expiry is 25th February. Strike selection, what we do is assume that you have a bearish view on the market now and it is 35,900, or you always choose an in the money which is 36,000. So we buy a 36,000 put. When you are an option buyer, always buy in the money, one strike in the money, only then you will make money. Otherwise you will start losing, because there will be more of theta decay. So always make a position like this. You buy say 100 quantity of this put, and what is my loss here? 50,000 max loss if I go wrong. But why should I give 50,000 to the market, which is not my risk taking appetite? So what do? I choose a 400 strike below, which is 35,600. 35,600 put is what I sell, equal quantity. So now what will happen? My loss was initially 50,000, now it has come down to 19,000, and my profit is about 20,680. Okay. So in this scenario, what will happen even if the market goes a little bit down, and if you see that your view has gone wrong, so any point of time when you look at this P&L line, so this will tell you if any point of time you're reaching your maximum 3k loss which you have defined, you can exit the position. You don't have to wait. And the scenarios where the market drops down and again bounces back new direction, you can avoid market taking away your stop losses, because this is intact, your risk is defined, your reward is defined. So in case if you want to make an adjustment here, you can definitely go and sell more of the out of the money put. So what will happen even if you are wrong, that the market is not bearish, it is not going down, but it has become bullish? So in this scenario also, your profit, look at the T+0 line, it's 740, 480. You can always exit this position in profit and adjust it like this. But if you want to still make money, you can always sell more and you can end up in profit here itself. So this is how you adjust your position. So both ways you can play around, and if market starts coming down and it expires in this season, you will definitely make this 51,000 profit, because here is your peak. So you are hedged on this side, you are hedged if it comes this side, but you're not letting it go out of this pyramid, because then only your profit will start declining. You have to ensure that this T+0 P&L is always positive, and anytime if you see that it is going into a negative of 3,000, you always cut the trade and look out for a fresh trade. So that's simple strategy which you can do. So here scaling up will be very easy for you, right? You don't have to worry that what will be my loss. So you can always scale up. If you have 200 quantity, you can trade. Here also 200 quantity, and this will be a defined risk. 38,000 if you lose, 41,000 is your maximum profit. And if it starts going in the negative direction, you increase your quantity here, and you can take this 4,000 loss here if it starts going in this direction, 1,800 to 2,000, 3,000. Then you can exit with profit. So this is how you can adjust your position and play around. So on an intraday basis, when you see that you are going to get a breakout like this, a rejection like this, here you have to go and actually buy this put and sell a 300 point away put somewhere here, so that you can capture this entire fall. Even if the whipsaws happen, you are comfortably home with your profit. There is no worry for you. So this is how you have to trade, traders, and it's very important that you manage your psychology well. Otherwise you cannot survive in the market, because every time you will get frustrated when your stop loss is hit and your capital gets eroded, which is the most concerning thing, and you will not be in a position to come back, because once you start to have more drawdown, more than 50%, you will not be able to recover it back. So trust me, you have to follow this system, and follow this system only, that you have to hedge positions, and whatever view you have, whether it is bullish, bearish, always create this kind of positions. Now let me show you what position I am holding right now. So you can see in my portfolio, so this is what I am holding right now, which is already in 1,600 profit. Here my view has been bearish, but I feel that market can bounce for some bit of a time. So I have made a position. Even if the market bounces into this position and expires here, I'll make a big profit. And if it goes into this direction, I'll make anyways 2000 profit. So this is what I have taken for Monday. Already this week we have got good profits, and we are able to cover a lot of or drawdowns which happened in the past. So that is a good sign, and I am finding it very easy to trade in this strategy. Even if you are going to office and want to have a comfortable, you can focus on your work, and you can leave the strategy, because here you have defined your risk, your profit, that is already defined. End of the day, if you see that your profit target is met, you can square up the position and then create a fresh position. And if you see there is a difference in the trend, then you can adjust your position and make positions like this, so that you are safeguarded by any kind of whipsaws market shows you. Understand that market is not here to give you money. It is there created to take your money away, because it's all exchange of money from one hand to another hand. So there's nobody who's sitting there to give you money so easily. So please understand this. There are big players in the market, big funds, who are trying to grab money from the retail investors. That is their job. So they will try to confuse you as much as possible and take the money from your hand. So this way you can always safeguard your money and ensure that you are aligned with the market most of the time, and whipsaws are being taken care by these strategies. So you have to be super confident about your technical analysis and understand it properly before getting into this. So always try to make these kind of positions, mostly butterflies, or or these kind of iron condos, if you're doing a swing trading, and debit spreads or credit spreads in intraday. So thank you so much for watching this video, guys, and do watch other videos also on my channel. I have spoken about these strategies in detail, and please do subscribe and share this knowledge with all the people who are wanting to become a successful trader. Thank you so much for watching.